The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. I posted the charts for the German DAX and also for the FTSE. As you can see, we've had a little bit of a sell-off from the highs we made yesterday. We had a little bit higher opening in the DAX last night, and then it started to hold on just a second here. I'm trying to. We have Shane will be our guest today at the first break, folks. Shane Smolian, wolftrader.com, where he's going to go over some of the things that he's looking at. And of course, one of his specialties, among many that he has, is the fact that he watches the Fed, and he'll be talking to us about that and plus what he sees for the market. Now, I would like to share with you what about the F word, boys and girls. When we trade these markets, the F word is the one that always is facing us in the face all the time. But let's take a look here at the major F word that we had yesterday. No, it's not the Fed juice. It's frustration. Look at this, folks. We were trying to be a buyer at 177. Remember, I have that mismarked. It's 71 here, but it's 177. You can see it on the green line there. That was a 382 retracement. We're now trading above 180, three handles higher. We missed it by 11 pips, and that was a big $3,000 move. And if you want to add insult to injury, here is the one from last night. This is almost as frustrating, but not quite. This is one of our favorite things to trade, which is the euro. And as you can see here, this is a 4-hour chart on the euro going back over the last 6 weeks. You can see the 61% retracement up there. At the end of March, we came down. We missed the 78% retracement by about 20 pips. And then last night, we have a perfect Gartley set up at the 110 level, and it gets to 109.90 by $80. You miss getting filled, and it is now trading substantially below 109, and it's actually below 108.50 right now. So this sets up a profit objective here and also a target at the 106.50, which would be at a double bottom. So this is going to be real interesting if the dollar index continues to increase like this euro says it's going to. So, of course, at any time it could fail, but that's what we're watching here this morning, just a few of them. Now, yesterday we had another up day. If you remember, we were watching, one of the main things that we were watching yesterday, folks, was that what do you call that darn thing? The high-grade bond index, the HYG. High-grade, I mean high-yield and high-grade. That's the understatement of the year. And we did not get above that high that we made on Monday, which was the 78.6 retracement at 84.50. I believe we closed at around 82.30, as I recall, yesterday. So you've got these two different patterns up here, these two candles. These are two crows, and if we gap down today in this one, that would be a very, very interesting one. It looks like we're going to be lower this morning because we are 500 points lower, but more than 500, well, around 500 points in the Dow Jones and down around, I guess, around 70 or 80 handles in the S&P, because these markets, when they move very, very quickly, as we've mentioned many, many times. So keep that in mind. It's a few things regarding those as far as trading those the euro and the bonds. The only way you can get in those, if you miss the exact price that you want to get into, is look for a small pattern as the market moves down. And one of the things I like to do is, as the market moves down, look for a retracement back up. But this was just a flying Walinda to the downside in the euro and a flying Walinda on the upside in the bond. So unless you chased it, you don't get a really good chance. This is where Tommy terrific over at Trader Tom is very good. He chases those markets and does a great job at it. But there's no way I can do it all night long anyway. But those were the ones that were happening last night early, and so we'll see what's going on. The other one that is important, folks, is the fact that we're going to bring this chart up because this is the gold chart of the Newmont Mining. That's the number one gold stock nowadays. And you'll notice here we have that ABCD pattern that completed up there at 61.5. We're going to be lower today. We're going to see what this correction is going to be, but there's a big ABCD going back from last year up at that 156 level. So this is a straight up move, and we know what's happened to straight up moves. They sometimes are preceded by straight down moves. The open interest in the bond and in the gold is not increasing as it should be, and the open interest in the silver is not increasing as it should be. Those two factors itself are warning signs, and if we dig a little bit deeper and take a look at what the silver has been doing, I think I posted that puppy because yes, I did. Let's get it up here. Here's the silver over the last several days. This happens to be a get one second. You're right. David White posts the best stuff in a that's never ask a barber if you need a haircut. That's for sure. Okay, here's the chart of the silver. You'll notice here that we have a 3 drive to a top pattern up there at the 1.27 ABCD expansion. If you'll remember, the 61% retracement on the silver on the long-term daily chart came in at 1612. And we did get as high as 1628, and you see we gave all of this back, and now we're proceeding to go lower still. So until we clear that level on a closing basis, I still have to be very, very cautious about being long the gold. So one thing that I did do this morning is I posted the videos that I did last night on the gold market showing what I expected to see happen. And then I also posted the videos of the crude oil and what I expected to see happen. Now, let's just chat just a minute about the crude oil, folks. I don't know if most of you follow crude oil closely, but do you realize that the spot crude oil, the April and May, are selling for $7 a barrel under what it's selling for July? Now, the reason for that is traders are anticipating that this virus thing is going to be over by June crude, not July crude. So the difference between April and June is $7 a barrel. So they're anticipating that this is going to be over by June. And so then the prices will be higher because they're going to be cutting back in between 10 and 20 million barrels a day. Now, that may or may not be true, but here again, as a technician, all you have to go on is to look to see what's going on with the prices themselves. And as we can see, we did go down and we made a new low on this move here. We've got to almost the objective we were looking at from the video, which was 1890. We got down to 1920, and now we're going to see what's going to happen. And Duffy just posted a chart that the Wall Street Journal brought out that that crude oil could go negative. That would be news. Thanks, Duffy. 877-927-6648. Always good to have a laugh. We'll be right back with Shane Smolian, thewolftrader.com.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we have Shane Smolian, wolftrader.com, on the line. Shane, how are you doing today?
Good morning. Is this the office of Duke and Duke?
You're 100 South Broad Street. You got it right. You win the prize. And
Sounds
what we're
good.
going to do today, your prize is we are turning over the microphone to you. So why don't you go ahead and tell us what you're looking at for today?
Thank you. How's the lockdown out there going? How's your quarantine?
It's very, very similar to the federal prison that we have there in Florence, California, Florence, Arizona. So everybody's doing okay. You know, we're still above ground on the green side of the grass. Can't ask for anything more.
That's good. How are the streets? Are they pretty empty? Are they full?
Oh, yes. Yeah. Well, everybody's staying inside. That's for sure.
Okay. I was out driving. I take some drives, go to the grocery store, or BJ's or Costco every week, once a week. And I was out yesterday, and the roads were just packed. I don't know where all these people are going, but, you know, down here in Miami,
Wow.
in the 305, people are kind of doing their own wild stuff here. It's strange. I didn't expect to see that much traffic. I don't know where they're going, but
Wow.
I think people are itching to get back to do something. So
I agree.
the businesses are for the most part closed, but I'm surprised to see a lot of traffic out on the road. So, but anyway, so. Let's get started here. So first of all, if the people want to reach me, the website is www.wolftraderfutures.com, and the free Twitter is at wolftrader FUTU1, like futures 1. So if you want to reach me, you can go there. There's a free membership there, so come check us out. I'd like to start out today with the Fear and Greed Index because I usually start out with this. And this is a measure from CNN. They actually do a very good job of this. It measures various market indicators and sentiment measures, and we're up to a value of about 45 now, which is getting a lot better than it was. It was all the way down here to like 1 to 2 during that sell-off. So this is good. It's not quite into a bullish area yet, but it's bullish contrarian signal yet, but it's kind of neutral right now. So I still think there's some more room for this to move to this side, particularly with the Fed in here. And I'm going to get into that in the next few slides, but that's good. That's good to see that we're not hitting levels of 1 and 2, because that's not good.
That's for sure.
Here's a graph over time of the fear and greed index. And again, you can find this on CNN.com. Just type in CNN fear and greed over time. And you can see we came off these lows here with the Corona sell-off right around the 21st, 22nd. And that also corresponded with that aspect that I was talking about, the Saturn Admetos aspect crossing the Aries point, which is the world. It correlated exactly with that. And then the sun came in there, and the sun is, when the sun comes into a planetary picture, it marks the exact day of an event. And the moon is the hour. But these things tend to play out in strange ways. When you have exact conjunctions like we had with this was a generational planetary picture. In other words, everything was exactly 0 degrees on the Aries point. So when you see these type of viruses play out in the global picture, they tend to show up in the charts. And when I say show up, I don't mean, this planet is in this sign and the moon was over here. These are exact degrees. This type of astrology, the Uranian astrology, was developed by Germans. And the precision of the Germans. I mean, this was developed in World War I over 100 years ago. And the stuff still works today, I mean, to the exact degree. So, but now we're climbing back up again, and we're kind of into this congestion range into here. So that's, that's neither bullish nor bearish, but we're definitely not at those extreme levels that we saw. So coming off the lows. All right, okay. So the next chart here is the Corona. Now I'm going to tone this down because people thought I took too long on this last time, so I'm just going to do about 3 slides on this, but I do want to touch on this because it's affecting the market. So I had these different models that I was using. These are polynomial models. I had a 4th degree and a 3rd degree polynomial here. You can see this in the red and the blue. These are the dotted lines going up here. These are the models. And then the big red dots, this is the actual Corona cases. And so what's happening is that these cases are jogging inside of this line here. So these are the more aggressive models. And it's actually starting to look like it might be trying to do a plateau here. So I'm projecting us now into this cone out into here now in the next week. And I know we're not following this exponential rise anymore. I think we might be starting to see some type of a leveling out in the next week, which is really good. And I think the market's anticipating this. It may not be as aggressive as this model. This is the 6th degree polynomial, but as this model starts to level out, I'm going to have to keep adjusting what I'm using to model it, because it's obviously the 2nd and 3rd, the 4th and the 3rd degrees are not going to keep rising like this. So this is good. This is good news for the world. Next slide. This is just the confirmed cases. We haven't quite cracked 2 million yet, but we will probably by tomorrow. We're looking at 127,000 deaths globally, and 500,000 have recovered. 185 countries. Obviously, the worst parts are here in the Northeast United States, and then in Europe, of course. Wuhan has recovered allegedly, if we believe what's coming out of China. But it makes sense. There's what we're looking at here is when you're talking about the quarantine, you're typically looking at 2 weeks before it starts to flatten out the curve. And then, so this is like flattening out. And then you're looking at about 2 to 3 months before the lockdowns are lifted. And so they were in about 2.5 months quarantine, and they finally lifted it. So we have a model going forward. So things should start improving here, and so that's the advantage of getting this virus last from other countries. This is a screenshot that I took from CBS this morning. So I'm always looking through different media sources just to see what I can find. And this was interesting. This is the change in intubations. In essence, that's a procedure that has to happen before people go on a ventilator. And we've now reached, this was on the weekend, we've reached levels that we saw at the beginning of the crisis. So that's good. The ventilators are down, or the need for the ventilators are down. So that's critical. I think the hospitalizations are number 2 that are critical, but this is like this is one step above measuring deaths. And so this is probably a leading indicator before the deaths. So that's good. Even though New York saw an uptick yesterday in the deaths, I think that this is a metric that we need to look at, and that's a positive and an encouraging sign here. So I think the argument right now is, when do we open the country? And, you know, some states are more cautious than others, and for good reason. We can't compare this to the flu. People are in quarantine. So when you say something like, oh, only 20 or 30,000 people have died, why are we shutting down the country? Well, that's because everybody's in quarantine. Okay, so if they weren't in quarantine, we'd be looking at 2 or 3 million. That's like saying, I took an antibiotic and look, my fever wasn't so bad. I didn't need the antibiotic. That's kind of like saying that. So.
Okay. Hey, we had to pay a few bills. We'll be right back with the Wolf Trader himself, Shane Smolian. We'll be right back, folks. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have as our guest today none other than the Wolf Trader himself, Shane Smolian. You want to continue, my friend?
Sure. So let's go here to this Aries Point forecast. I think this is just incredible. There's a book called Alfred Wittde's Rules for Planetary Pictures. This stuff was written over 100 years ago. And if you look this up, the Aries Point represents the world. It's 0 degrees on the tropical zodiac. And this Saturn at Mito's midpoint passed exactly on this 0 degree point with the sun. And I was talking about this before, but this happened on the 20th, and then the sun came along and made that planetary picture. And this was right near the lows of the markets. Now this midpoint, and I've said this before, it's going to follow. And Admetos is so far out, it's essentially like a stationary point. But this Saturn is moving into Aquarius, and then it's going to zigzag back and forth across like this. And I think we're going to be able to track the broad-based equities by how this midpoint is moving. And I have this for subscribers. I actually have a video on that, so the newsletter subscribers and the gold members can see that. The exact dates. I'm looking probably somewhere out into May, like late May, for a possible top on equities, and then it's going to zigzag back and forth across, and it looks like we might have a pretty scary October and November, or could. But keep in mind that the underlying mechanics here are that the Fed is strong with these markets. So we got to keep that into mind. So this is actual tropical radix right now. And remember, all of these planets, this is just a big clock. Think about this like a clock with many hands on the clock. So the one hand that I'm going to look at right now is the moon. The moon's at 3 degrees of Aquarius. That's the first decan. Decans are 10 degrees, so 10, 20. So it goes 0 to 10, 10 to 20, and then 20 to 30. And so why does that matter? Well, the lunar chart that we have up here shows you how the market moves through these different phases. So right now we're coming into this little dip here on the lunar cycle. So on the actual daily charts, even though we're in an uptrend, we're seeing like a little wobble down right now in the markets. But I think overall the markets are very strong. The Fed use is strong. But this is super interesting because if you follow the signs, again, the sign is just the position of the moon, like where is it as a degree. So if it's at 0 degrees, it's starting into Aries. 0 to 30 is Aries, 30 to 60 is Taurus, etc. So it's just like looking at a clock. I think people get thrown off when they see the signs, but in essence, we're just measuring a clock. So that's how the Mayans did it. The planets they're more precise than atomic clocks. If you get down to tracking the exact minutes and seconds of the planetary movements, they follow these Newtonian models exactly. So that's good. This is just a snapshot here of what we offer in the gold package. I cover 11 symbols now. I've added platinum here, and so every day I post the closing bell here with the 11 different symbols, and I post whether we have an advantage or not, and then I post some comments here. So every day people get these different signals on the different commodities. And right now we don't really have too many trades set up. There was just a natural gas and S&P right now. S&P has been surging for a while. But when we get the tape and the cycle to agree, we get these agreements and these advantages. And so these give some nice insights. I would say an ease of movement of the tape for the markets. And so that's useful because it gives you an advantage into knowing that you have the tape and the solar cycle on your advantage. This is just to show the volume of purchases that the Fed has done. The Fed is had an $82 billion day. So to put that in perspective, during normal QE periods, you're looking at about $5 billion. So you're up to $82 billion now on a peak day. Now they've trimmed back to about $31 billion, but in essence, that's still huge. It's still huge, and I think they've finally got control back of the markets. Most of these are outright Treasury coupons. I know you had a guest on the other day that was talking about repos, and these are not repos. These are direct purchases on the open market. So the Fed is adding to the balance sheet in Treasuries in large volumes like they haven't done before. So just want to clarify that this is not the repo market is huge too, but this is not repos. These are just purchases by the Fed. Now this is the S&P chart here, the daily chart. And this is a really important chart to look at here because I put here the Fed juice 3.0 down here in the red. And this is the measure of how strong the Fed is in relation to the market. So this indicator is a very good trending indicator for the S&P. And these other arrows, the solar cycle is here in blue. So you see the blue arrows. This is the solar cycle, and the black one is the planetary speed index. So right in here on the 22nd and 24th, they did a good job of marking that low. And then the Fed juice went into a buy here. It's still very strong. Now notice that the solar cycle went into a sell and the planetary speed index went into a sell, and the market still kept going. So when I saw this, I immediately recognized the fact that this is a very strong pattern. And so what happens is when you have an advancing market into a declining cycle, that's called a positive relative market bias. In other words, even though the cycle is down, the market is still going higher. And so this is why I'm looking at this Fed juice down here. So I issued an advantage up again on this because the Fed juice is so strong on this. So what that means is that when we get into the later parts of the month have the more positive Astro, and the exact dates are in the newsletter and for gold members. But what this means is that if the Fed juice continues to stay in this buy profile, that we have an even stronger chance to advance even more into the end of the month. So that's important because if you don't understand the bias of what's going on, it's hard to understand when you see a surge, where did this come from? It doesn't make sense because these cycles are just tendencies of the market, what they've tended to do across, the last 5 years, 10 years, 15 years, whatever, however far back you're going to look. But they don't always, it doesn't have to follow these. And this is why I follow the tape along with the Astro. If you just follow the Astro alone, it's not enough, because if you're going to go against the Fed, it's going to be a hard road for you to go down because the Fed is so dominant right now that we really need to watch what they're doing. So this is a zoom picture of the Fed juice, and it's very, very powerful right now. I haven't seen it this strong since probably 2009, 2010. This is a signature that I see only in QE periods. It's a very dominant feature right now on the S&P. So we really need to pay attention to it, and it looks very stable right now. So that's something to pay close attention to on this. So this Fed juice signal is optimized. It's optimized probably every 50 to 100 days. So this one will go through August the 4th. And so the reason I say that is it's important because I really don't like to touch these indicators too much because every now and then we have to re-optimize them, but people plot and plan according to these signals. So I try to leave everything as stable as possible in place. Occasionally we have to do some upgrades, but I try to leave them alone. So I like the way that this picture looks right here.
Wow. It's really exciting. I'll tell you, I'm very impressed with your work. Hey, we got to take a break. Can you stay with us for one more segment? We'll be right back, folks. wolftrader.net, 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and we're talking with Shane Smoyan. Shane, you want to continue, please? It's very interesting.
Sure. Okay, so this is the bond spread. I've started tracking this because some subscribers wanted to see this, and it's actually a very important indicator. A lot of fund managers use this to switch into high quality versus low quality yield bonds, and this spread went into at the end of January, went into the high quality bonds. But what happened is you had this big gap up here on the junk bonds, and the spread began to narrow dramatically here. And what that represents is that's the Fed's pledge to begin buying junk bonds. So that's a pledge. They may or may not need to really go forward with this in a large degree, but they're basically saying we will do this. And just by them saying that, it caused this jump in the junk bonds. So that's good. That's good for liquidity's sake in terms of the Fed saying that they would step in if they need to. So just wanted to point that out. I have a bond Fed juice that I'll get to, but I want to go into some planetary speed index here. This is the 2008, and what I'm going to do is I'm going to show you the planetary speed index with the Fed juice. Now, I didn't have a Fed juice in 2008 because it didn't exist. It existed, but not to the level we see. So you can see that before you have the Fed juice, that the markets essentially just follow this planetary speed index beautifully. You see even the peak of this planetary speed index represents some type of a peak in the markets, and then the markets continue. This planetary speed index went down, the markets fell down, and it tracked it almost perfectly. And then other models like the Bradley also worked well during this time. But when you got the Fed involved, now you've got a different picture. This is the flash crash. I want to point this out because I want to compare what's going on now to what happened in previous periods. When you had this Fed juice raw in 2010, that's what this blue line represents. This was already declining for a long time before the flash crash occurred here. And you had a gentleman on the other day talking about the computers and that the speed of the recoveries occur because of the computers. Now, I think that statement was very true in this flash crash. You had certain stocks like Procter trading around $1 or under $1, and then they just instantly rebounded. They repriced everything, and it went right back. So in cases like this, definitely the computers affected that sharp rebound. But I think what we're seeing right now is a longer-term picture of the Fed. This is also the planetary speed index in the flash crash, and essentially both of these models work. I mean, you could see the Fed juice was eroding, and then right here the planetary speed index had this big drop here right with the flash crash. So again, the markets model this stuff very well, especially when you have a weaker Fed, and we had that weaker Fed there in the 2010. This is 2019 now. And so this is recent. I had a webinar last Saturday. So if anybody's interested, I'm probably going to have another one this Saturday. I did it on Zoom. So if you want to do a video, I'm there on video on the webinar, and I posted a free copy of that on the site. You guys can go there and see that. But next Saturday, I'll probably have one. But somebody asked me about this. The Fed use in 2019, how did that look? In essence, you saw a deterioration here, 2018, 2019, before the markets declined into here. You see this into here? So that was eroding before, and the Fed use, or the Planetary Speed Index, followed with that. You can see here, again, the Planetary Speed Index models this decline also. So when you got the Fed weakening, the Planetary Speed Index tends to be very, very good, particularly to the downside, when you don't have that support of the Fed providing that liquidity in there. So that's important, because I want to go to what's going on right now. What's going on right now is nothing like those pictures. So I think it's important to be a student of recent history. You know, I don't say history like going back 50 years, because you got to look at Fed era, 2009, and that's what I just showed you. That's not what we see here. We see a surging Fed juice, and the markets are coming off these lows here. And so, you know, if I go back and look at every case of this, it shows that the market has every chance in the world of recovering here from the terms of the Fed. And this is the Planetary Speed Index here in the recent decline. So you can see that, again, it was modeling it very well. Even these little dips into here in the recent dip into here, and then the big decline we had was modeled here. And we bottomed nicely here at the end of March with the Planetary Speed Index and this last surge up. Now, this is the current market right here. We've had a declining Planetary Speed Index, and the market has held its ground. And when that happens, that's a positive sign. So we will be coming up to a positive Planetary Speed Index around the 19th. It bottoms into here. And then if the Fed juice continues to be strong, we have a very good chance to increase the size and scope of that rally. And again, I think this can happen relatively quickly. I mean, I think once the economy comes back online, I think we're going to make a full recovery. I think everything's going to be okay. Now, of course, there's damage. Companies have been forced to go out of business, and people are hurting financially, and I'm not minimizing that. But based on how I read the charts here, I've always said from the beginning that this is still a bull market. I've never once changed my stance on that, not even for a day, not even we were all the way down here. I still maintain that. And I still maintain that if we can handle this correctly with the recovery efforts and restarting the market, I think there's every chance this could go back up to the highs and just continue going higher. Because why? What's governing the markets? The Fed is. The Fed juice is governing the markets. And what is the Fed juice doing? The Fed juice is surging. The Fed juice is at all-time highs. So this is how I analyze the markets. And if you look at the markets from the perspective of the Fed, it makes complete sense. Like, there's not one case here that I've shown you where it didn't make sense. Like, if you look at every major high and every major low, this is what models the market since 2009. So when I say you have to be a student, you have to be a student of recent history since 2009, and then the markets will make sense. It doesn't make sense if you don't look at it from the Fed. It doesn't make sense that the market could go down and then rebound and go back up, or even go like right now. We're already up to almost to the 61%. That doesn't make sense if you look at it from the perspective of the market. Just how could it bounce so quickly, so fast? Well, because it's got some help. It's got a lot of help there from the Fed. And, we're already coming up to this 61. We're not quite the 61%. We passed through the 50%, but, we're getting up to this range into here. And then this is the 17th out into here. So I think that, again, that there's a very good chance that we'll just continue to meander up. And then once that Planetary Speed Index hits that buy, and if the Fed juice is still strong, we've got a good chance to continue higher here. So, that's just the perspective that I take. It's not right, and there's no right or wrong with these markets, but that's the perspective that I'm using. I'm looking at what is the Fed doing, and when the Fed does this, what did it do in the past? And in the past, it's been a very bullish situation. So now I want to say something to people. If I saw this Fed juice rolling over, and I saw the Fed juice starting to do this, I would tell you this is not a good sign. And I would be the first one to say that. In other words, I'm not just a bull for bull's sake, but from what I'm seeing here, I like what I see. I think it looks really good. And I think we've got a good chance to have a full recovery here.
Wow, this is really good news. Can you stay with us and wind us up at the end to let us know how we can reach you? 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, with Shane Smolian, wolftrader.com, and with wolftraderfutures.com. We have a question for one of our listeners. Shane, as you mentioned the Bradley model, do you still watch it very much, or what's your feeling on the Bradley at this point?
Well, I haven't looked too much at the Bradley because I've created my own I call it the general combined transits, where I actually include more points than Bradley had. I haven't taken a look at it too much. I haven't found it to be too accurate in the last couple of years, but I can take a look at it. If they want to contact me, I'll give them my opinion. They can go to the website, and I have the website up here for everybody to see. This is the Wolf Trader Futures, and if you want to sign up, there's a free member login here at the top. Can you guys see that, the page?
Yes, we can see it, okay. Yes.
So there's a free member log. You sign up there, you can set up a free account. If you want to sign up for the packages, you click here where it says sign up here, and that'll take you to the different packages that are there. I have a newsletter in the gold membership. Essentially, both of these are newsletter services. The monthly newsletter comes out once a month, and then I do a weekly video. And the gold membership is essentially a daily newsletter that I post on Twitter. So you would have to get a Twitter account to do that. But I'm able to post between 25 to 40 charts a day, and I also summarize those markets. And then this is the site here. If you want to take a look, I put a quote here: making proper sense of markets since 2008. And again, I think to make proper sense of the markets, you have to look at what the Fed is doing. And I have some information here. If you want to see past shows, I put the shows here on the site, and I put some charts here of recent Fed juice. And then here I talk about the bond market Fed juice. I actually have a bond market Fed juice now that can track the bonds, and the bonds actually go into a sell, I believe, today. So if the Fed juice on the bond is in a sell, then that could correspond nicely to a rally in equity. So we'll just have to see. But the newsletter is summarized here along with the gold membership. And then there's a chat service down here. So you guys can chat with me. If you have questions, I really try my best to answer every single question in an email. And if there's a customer service question, I'll get on the phone with you and go through stuff if you need questions. So
Okay.
let's talk, guys.
Do you offer 3 meals a day with all this? Thanks, folks. Shane Smolian, wolftraderfutures.com. We'll be back tomorrow, folks, God willing.